Hey everyone, Benis Kumar Moses here, your behavior and finance expert. Today, let's talk about something crucial in our hyper-connected world, the noise detox. Have you ever noticed how financial news headlines are always so dramatic? A massive crash is just around the corner, or this rally is unstoppable. It's pure drama designed to grab your attention. This isn't just sensationalism. It's a direct attack on your brain's logic, using something called the availability heuristic. This is a mental shortcut where our brains mistake recent, vivid, and emotional information for the absolute truth. We see scary headlines everywhere, so we start believing a crash is inevitable and feel the urge to sell everything. But here's the problem. Investing based on headlines isn't investing at all. It's reacting. It's letting fear drive your financial decisions. And that's a recipe for disaster. True financial success comes from a calm, strategic approach, not from panicking every time the news shouts. So, how do we fight this? How do we perform a noise detox? It starts with three simple, powerful steps. First, you need to filter your inputs. Stop endlessly scrolling through daily market news. Instead, focus on long-term data, well-researched reports, and the history of market cycles. This shifts your perspective from the chaotic present to the predictable patterns of the past. Reading a book on economic history will serve you far better than reading 100 sensational articles. Step 2 is to limit how often you check your portfolio. This might sound counterintuitive, but constant checking just feeds anxiety. You'll see every minor dip and feel the urge to do something, anything. Instead, switch to a schedule. Check your investments monthly or even quarterly. This distance gives your strategy time to work and prevents you from making rash decisions based on temporary market moods. Step 3 is the classic yet powerful advice. Diversify. Don't put all your eggs in one basket. By spreading your investments across different geographies like the US, Europe, and emerging markets, and across various asset classes such as stocks, bonds, and real estate, you build a buffer. When one area is down, another might be up, smoothing out your returns and protecting you from the panic that a single market downturn can cause. Finally, here's a pro tip that has saved me countless times. Write down your investment thesis. Before you invest in anything, document why you are doing it. What are your goals? What is your time horizon? What do you believe about this company or asset? Keep this document handy. Then, before you react to any shocking headline, read your thesis. It acts as your rational anchor in a sea of emotional noise, reminding you of your original, well thought out plan. Ultimately, successful investing isn't about predicting the future, it's about managing your attention. The less noise you let in, the more clarity you will have. A quiet, focused mind makes profitable, long term decisions. Thanks so much for watching. If you found this helpful, please hit that like button and subscribe for more insights on mastering your financial behavior. See you in the next video.